What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did get a very strong bounce across the indices after FOMC, but is it just a dead cat bounce or is this going to be a sustainable counter trend relief rally? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up 1.43% and we did see a lot of volatility, which is to be expected during FOMC day, and we don't have any clarity from the price action where we are going from here, but I still do favor the possibility that we are going up here to fill this gap on SPY before the end of the month. But obviously we are going to let price action guide us on where we're going from here. So for that reason, we have very clear defined risk levels, and for long trades that will be SPY 370, because below SPY 370, I do believe SPY is trying to get down to 350. Now in the event that we did see what is going to be a tradable bottom, which means we're going to see a relief rally in the short term, we are more than likely not going to break down below SPY 370, and we could rally all the way up to close the gap at 401 or possibly even retest that resistance zone at 408. But there will be a lot of bears waiting at that level because we are in a bear market and the bears will be showing up at all resistance levels. Remember, we're expecting all bounces to be lower highs before the next lower low because we are in a downtrend and there's no reason to expect anything else until the price action proves itself. In order to get bullish that a bottom is in, we need to see higher highs and higher lows, and we have not seen that yet. But once we do get higher highs and higher lows in the price action, we will start to view this market through a bullish lens. But for now, we are getting lower highs and lower lows, which is the recipe for a downtrend. And in a downtrend, there is absolutely no reason to speculate about where a bottom might be. So while we are expecting a bounce in the short term, we have a clearly defined risk level at 370. So we know exactly when to get out if we're wrong when the price action closes below that level. Now in the short term, we will have resistance at this gap close at 389. And we do have this resistance zone right around 385 as well. So those will be your nearest term resistance levels you will want to watch the price action at. If this is just a dead cat bounce, we'll likely get rejected from either 385 and 389 and then continue lower. And never rule out the possibility if we go lower that we could still get a double bottom off of the recent low, which means you need to see price action breaking and closing below 370 before you start getting bearish on that leg lower to 350. Now also keep in mind there was an increase in volume today, which is a great sign because we don't want to see an anemic market with no buyers, and we clearly did have buyers returning to the market today, even though a lot of this volume was likely shorts getting squeezed out of their positions because they were expecting FOMC to lead to a leg lower, and they did end up having to cover that short position. If we break above the gap at 389, look for strong resistance above there at 395 and the gap closed just above 401. But the strongest resistance will be all the way up here right around 407 to 408. So while I do have an arrow showing that these gaps will likely close by the end of the month, there is no reason it can't happen sooner. So don't rule out the possibility that we get a very impulsive short squeeze rally to close those gaps sooner rather than later. You have very clear risk levels if you're shorting as a bear and very clear support levels if you're going long as a bull. Don't get whipsawed in between because it's likely going to be a volatile whipsaw between 370 and 385. On the NASDAQ 100 triple Qs, we were up 2.5% today, and we did see the triple Qs bouncing off of 275 and testing resistance right around 285 and failing to close above that level. Overall, we see a very similar story as SPY with increasing volume on a green day. And we did start to close some of that upside gap, but the gap doesn't fully close until we get just above 288. Look for resistance at 285 and 288. If it's just a dead cat, that will likely be enough to send us lower. And you're getting a lot more cautious if we start closing below 275 because it's likely we're going lower. And below 275, we could start trending all the way down to about 258 to 260. But you will want to watch this level of interest right around 269.5. Keep in mind these are downtrends, so don't be afraid to lock in your profits if you're taking long trades, and make sure you have very clear defined risk levels, which I suggest using this level down here at 275. If we close the gap and continue higher, you still have resistance at 293 and the gap closed at 299. And if we break above 299, look for a retest of 306, where there will be a lot of bears waiting at that level. And if we break above there, we could still test around 318. So we'll know very soon if this is just the dead cat bounce before the next leg lower, or it's some sort of sustainable bearish relief rally. So either way, look for follow through with tomorrow's price action. And if we start to get some green candles closing near the high of the day, that will be your indication that we're getting more bullish price action and more bears retreating to higher resistance levels before they're willing to short this market. In the Dow Jones, we were up 0.96%, but the Dow Jones did fail to close above 308 and did get rejected from that resistance right around 310. and did start to push on some of that gap. If we break above 310, the gap fully closes when we get to just above 314. And above 314, you're looking for resistance at 316 and the next gap close at 323. There will be lots of bears at these resistance levels because we are in such a strong downtrend. So get a lot more cautious if we continue to break down and take out this low at 304 for that next leg lower price target at 297. Again, you can clearly see that volume is picking up on green days, so that is a relatively bullish sign, but we're not getting bullish candles, and one day means absolutely nothing. We need to see a day of follow through. So if you're bullish, make sure you're setting your risk down here at 304 on the Dow and get a lot more cautious if we break and close below that level. On the Russell 2000 IWM ETF, we were up 1.46%. Getting rejected right around that resistance zone at the previous low at 175, and we do have a doji looking candle on increasing volume. The small caps still look relatively weak, but so far this does look like a successful double bottom as long as we don't break down below 169. Below 169, it should be a quick trip to fill the gap at 165.7. And if we fail to hold that level as support, you're looking for the next leg lower all the way down there at 156. Above 175, look for the gap close at 178, and above 178, look for resistance at 181 and the gap close right around 183.5. On the ARK ETF, we were up 6.57%, getting that strong bounce because we were well below the lower Bollinger Band, and we did close the gap at $40, which is still a resistance level. If we get rejected from 40, you're looking for the price target at 33.7, but still the possibility that we get another double bottom, triple bottom look off of $36. So if we do find support at 36 yet again and come out here and close above 40, that will be a bullish breakout, no doubt about it. However, if we fail to break above 40, continue to look for lower prices because this is still in a very strong bear market. Above 40, it's likely we could close the gap at 43. And if we start closing above 43, look for a retest of resistance at 47. On the VIX, we were down 9.37%, and we did see the VIX getting crushed all the way back down to fill the gap. So we do have the VIX in a bull trend. The VIX did fill the gap below. The question from here is, are we going to see the VIX spiking above 30 yet again? Remember, VIX above 30 is an extremely volatile bear market with an increased risk of capitulation, which means the VIX would likely spike all the way up to 38 and likely even higher. Capitulation usually does mark the bottom in a bear market, so if you do see that price action, that is usually a good time to start buying in most bear markets. However, if the VIX starts crushing back down and closes below 24, we could have already seen a temporary bottom, and that will be a bullish signal that we do have the all clear for a relief rally. So watch this critical support down here at VIX levels of 24, but you need to remember that any of these VIX levels are still elevated volatility, and we could still see plenty of whipsaws in between these support and resistance levels. On Bitcoin, we're currently down just over 2%, and we did see Bitcoin successfully test that support zone at $20,000, and so far we are bouncing, but this is extremely oversold now 4 days in a row below the lower Bollinger Band, so I do think you're going to see a relief rally, and you are going to see a bounce in Bitcoin back up to 25,000 and probably even all the way back up to 28,000. But keep in mind, there's the possibility we round out some type of support bottom around 20,000 before we see that bounce. So if you are a long-term Bitcoin bull, these are definitely levels I would consider accumulating at, but you have to remember it's in a very strong downtrend and could still be heading lower. If we break down below 20,000, then the next leg lower is all the way down here at $12,000, so that will be a long time coming, and it will likely not happen anytime soon, but there's still the possibility that we could be going lower. You're getting a lot more bullish if we can break and close back over 28,000, and then the next bullish breakout will be the close all the way back above about 35 to 37,000. On Nvidia stock, we were up 4.36%, and Nvidia did close back over that previous low at 161. So for all we know, we may have seen a triple bottom in Nvidia, so watch that very critical low at 156, because if we break below 156, you're looking for the price target at 150, and below 150, you have the capitulation price target at 125. To the upside, we did fill the gap right around 169, so if we continue to close above that level, you're looking for a strong resistance around 176 to 179 and the gap close at 181. Above 181, we have strong resistance right around the previous high at 196. And above 196, we will be looking like a successful triple bottom, which will be a very bullish breakout. On Nvidia stock, we were up around 5.5% today, and we did close right on top of resistance at $700. So we're at a very critical pivot of whether or not we're going to get the bullish breakout above 700 or reverse from resistance and continue lower to retest support at 620 or that next leg lower at 571. If you get the bullish breakout above 700, you're looking for a retest of 763. And we're getting a lot more bullish once we get the daily close above 775. So watch that critical resistance, and right now keep in mind that Tesla still is in a downtrend, so it is still possible we are trending lower before we go any higher. On Apple stock, we were up 2.01%, and Apple did close the gap above at 137 after a successful bounce off of support right around 132. It's possible we're going to close the gap above at 142.5 if we do break back above 137. So you have critical resistance at 137 for the gap fill at 142.5 on the bullish breakout. If this is just the dead cat bounce, look for a rejection right around 137 to get down to our price target right around 130. And below 130, you're looking for capitulation, which means Apple could be going much lower. On the financial sector, we were up 1.12%, and the financial sector is just correcting some oversold conditions, and so far is still looking very bearish, but does have two gaps above to close. So we could be going for much higher prices before we get the next leg lower. The industrial sector was up right around 1% today, getting rejected right there at that resistance level and still in the bear trend, but we do have gaps to fill to the upside, so there's still more room to the upside to make a leg higher before we get another leg lower. The healthcare sector was up 1% today, still looking just like a dead cat bouncing, still in a bear trend, but we do have gaps to fill above, so you can't rule out the possibility that this counter trend relief rally is still going to higher prices before we go any lower. On the energy sector, we were down 2.21%, coming back down to the 50 EMA, and so far that level is holding up as support, but we did close below the support trend line. Without a doubt, the bull trend in the energy sector is looking a lot weaker the longer we spend below $85, and if we close below 81, look for that gap fill below right around 78. So jumping back over the S&P 500, this is definitely a positive sign that we're seeing a green day on increasing volume, but we were way too oversold and a bounce was due, so you can't get bullish just because we saw one green day. Can this bounce turn into something bigger and turn into a counter trend relief rally? Absolutely it can, but you know the exact price action to pay attention to know which direction we're going from here. Remember, SPY below 370 is extremely bearish and you need to get risk off, but if we hold above this support and we start to see the bulls buying the dip, and on smaller time frames we start to develop some type of higher highs and higher low bull trends, then we could see a sustainable rally all the way back up to about SPY 401 to 408. So keep an open mind, because even if the market is bearish and wants to go lower, it is going to move in the direction that hurts the most people possible, which could still be in the upward direction. So have a very solid trade plan, be patient, and always use proper risk management, and especially in a very volatile market. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.